All right, everybody, if you're here watching this video right now, then more than likely you have a business. More than likely, at some point, even not now, you might have been looking for funding, or you might need funding and you don't know that you need funding yet. But at some point, most businesses will need some type of funding. So I know most of you guys, when you're asking questions about it and how to get it and acquire it, you really wish you had some insider information on what it is that they're looking for, what's the best options that's out there, the fastest ways to get access to the capital as well as the easiest ways. So we're going to be diving deep into everything that you need to know about getting funding for your business. And we have an expert here, a VP over at Rok Financial. And he's going to give us the rundown on everything that you need to know in regards to getting business funding. And his name is Tony. And I'm going to go ahead and let him introduce himself in the company so that you guys can get more information on what they do and what they have to offer to you guys. So Tony, feel free to go ahead and take it over.
Thank you so much for the intro. And more than anything, thank you so much for the platform. As you mentioned, business owners are constantly looking for ways to grow, solve challenges, take advantage of opportunities. And what we've found is one of the biggest hurdle points becomes financing or funding for those opportunities or even in those challenges, right? So Rok Financial, we are a commercial financing broker in the alternative finance space. And I think the first point that I should make is that there is a difference between traditional and alternative finance. And when I say traditional, I'm talking your local bank, right? Your Chase, Wells Fargo, US Bank type of bank where, as consumers, we're educated to go to for when we need funding, right? But in 2023, that game has been flipped completely upside down. You can find funding pretty much anywhere. And I think that's almost more dangerous than it ever has been before. As a broker in the alternative finance industry, we pride ourselves on the relationships we've built with our lenders and being able to leverage their products and services for the small businesses that we come across. We've been doing this for well over a decade now, and that's given us a lot of experience. We've seen a lot. As everybody knows, we've gone through a pandemic, and that's changed funding forever. I've seen lines at a fax machine in the past, right? And now we're to a point where you can electronically sign out a loan and be done within just a couple of minutes. It's actually astonishing where we've gotten to. So I just want to start with a quick intro, like I said, to Rok Financial, what we are and what we stand for. And I think that's probably the most important thing to really hammer home in the start of this video is just letting you guys know that we're here as a resource. If you decide to apply with Rok Financial, there is no application fee. It takes about 60 seconds to complete our application. You can connect your banks electronically. And basically within 2 to 24 hours, you're going to know strong, hard approvals and declines. And now you may say declines. Why are you talking about that? Well, that's because that's where we're going to learn the most information. We're going to learn what are lenders seeing and what are the things that you can do to start to build your business to be what lenders want it to be. Because let's face it, not every business today is exactly what a lender wants to see. It's built to last in their business, but it might not be what the lenders want to see on paper. So that's where we come in. We make sure that business owners are able to dot their I's, cross their T's before they even get to that point. We have an in-house underwriting team that will pop the hood on your business, really take a look at what it is that you A, are looking to use the money for, but B, what is it that you would potentially qualify for, and make sure that those two things are actually speaking to each other and are actually in line with one another. Because that's what's most challenging here is really understanding is what's available to me actually what I'm trying to do. And that's where I think business owners kind of get caught up is they start to forget, why am I borrowing the money to begin with? Right? You start to think about, well, what's the rate? What's the term? How much is my payment? Well, what is the cost of doing nothing? Right? If we're going to go out and start to look into financing, there's a reason behind that. Are you purchasing equipment, which is going to bring new revenue into the business? Is it going to speed up operations so that things move more quickly and you can do more business that way? Are you buying out a competitor? Are you taking on additional space? What is it that you're doing? Is it a challenge that you're solving? Plenty of business owners go through cash flow crunches, right? If you just have a cash flow crunch right now where, hey, I have 3 jobs I potentially start, but I can't start them because I'm waiting for 4 more jobs to pay me in the past. Well, we can help you bridge that gap, right? We offer a ton of different financing, and that's what makes us more unique than a traditional bank or even going directly to a lender, is we offer things like term loans, lines of credit, cash advances, equipment financing and leasing, factoring, SBA loans. There really is a full suite of products for all of the different needs a small business owner may have. So you can rest assured that as you have that opportunity or challenge in your business, we can align you with the best product to service what it is that you're looking to do with the money. Now, on top of that, we're going to make sure you get the best deal because we work with all of the best lenders and we're going to make them compete for your business. What I mean by that is when you apply with Rok, we're going to, like I said, align you with the best product. But more than just that product, we're going to take a look at what are the best 2 or 3 lenders that offer that product, and we're going to make them compete for your business. So for example, let's say one comes back with a higher dollar amount, but the other one's got a better rate. We're going to share that information amongst them and allow them to compete for your business so that you get the best offer for your business. It really does allow the business owner to stay focused on their business while we focus on the financing. And then they can come in and do what they do best. And that's make well-educated decisions. So anytime you decide whether you're going to take a loan or not take a loan or whatever it is, we're just going to make sure that you know all of the ins and outs. Right. So if you are taking a loan, we're going to make sure you know all of the fees associated. What does it mean? How do you pay it back? What does it look like in terms of, are there any incentives to pay this loan off early, or what are the ins and outs of the deal? Because again, that's what makes these deals unique. And that's what we bring to the table, is being able to say, hey, this one, it might not stick because you don't technically meet their credit minimum or this or that, right? And we can help prepare you as a business owner with a plan A, a plan B, a plan C, all to take advantage of whatever opportunity or challenge it is that you have in the business. So as we start to kind of get wrapped up here, the one thing I do want to point out is that we help a wide range of business owners, right? Being that we're in alternative funding, you may say, hey, I probably don't qualify for your product because I don't qualify at the bank. Well, that's exactly where we operate. We have no minimum FICO credit score. We have no industry restrictions. So if you're a business owner who's ever been declined because you're a restaurant who doesn't meet 3 or 5 years minimum in business, that doesn't exist with us. If you are a business owner who has, I'm hearing like 700, 720 plus at the banks right now, but I'll give you 680. If you don't have above a 680 credit score and you're a business owner, you can't go to the bank and get funding. So if you don't have a 680 credit score, you can still get funding. You just can't go to the bank for that funding. So it's important that you understand what options are available. How do I plan on putting those options to use? And ultimately, are these options even worthwhile for my business? And what I mean by that is dollars have to make sense. Right. So at the end of the day, we're going to take a look at how you plan on making money and making sure that any money you take is going to make you enough money in the business that you can afford it. Right. Because ultimately, what we want to make sure is that you're here to continue doing business in the future.
Right. Right. And I wanted to chime in on one thing that you said there about how you guys have all of the different options available. And just so that people really realize how important that is. It's just like if you need something to eat and you go to McDonald's, you can only get what McDonald's has to offer. That's the same thing as going to a traditional bank to get your funding. But if you go to the mall has a plethora of different options for you. And, they might have people coming out, from behind the counter just to offer you some stuff to get you to come to them, give you free samples and whatnot. So having those different options that are available there. And like you said, with you guys using your knowledge and wisdom to kind of make sure that they're competing and giving the actual customer that's going to get the financing the best option is super important. And something I also just learned recently, I didn't know that there was a stat out there that most business owners do go to traditional banks versus going to alternative lenders, and the higher approval percentages come from alternative lenders versus going to traditional banks. And it's like something that most people don't know, because we've all just, I guess, grown up and been taught the place to go is to the banks because they've just always been there, when we have so many more options available to us that we could be taking advantage of to get what we need quicker, faster, easier, and probably on better terms.
No, you're totally right. At the end of the day, the bank serves its purpose, right? If you are purchasing a piece of real estate in your business and it's going to be over a 25, 30-year term, the bank has the ability to be in the local area, so they know the businesses around and they really understand, that is more of a bank type of deal, right? If you're purchasing a building in your business, if you're making a major, overhaul, that's where the banks get involved. But let's face it, as business owners, it's not always that. It's more about what are the curveballs that are being thrown to us on a day-to-day basis, right? Is it my inventory's backed up because shipping dates are long? Is it my, like I said earlier, is it the situation where, hey, I just have a couple of customers who haven't paid me yet, so I got a little bit of a cash flow crunch? Or is it a scenario where, hey, I'm just ramping up for the season here, right? And we're going into the spring, summer, type of months here. I'm a landscaper or a restaurant with outdoor seating, right? Are you one of these businesses that are just kind of ramping up for your season and you have some startup costs? I mean, we have a unique deal that we do, and not every deal is like this, but I always like to point out the unique ones because it speaks to where we do business. If, like I said, if you're purchasing a building, you do this all the time, you're a bank type client, right? The way that we operate though is, for example, we have a deal that we do every single year. It just renewed with us, and it's a fireworks company. They sell fireworks. It's a retail store. Guess when they do all their business? 4th of July, right? Every year they do 90% of their sales are between Memorial Day and Independence Day, right? That's when 90% of their sales happen. So what do? We fund them for their inventory in early March. So they'll get funding from us within the next week or two, and they'll go purchase all their inventory. They'll now have all this inventory on hand for their busy season, and they're able to purchase it before the busy season. So they're getting a discount because they purchase it early. They also get a discount because they purchase in such bulk and they're not kind of like eating at it as they make their sales. Right. And the last part of it that makes it so unique is we don't even capture payment from them until July, right? So they don't even make a single payment. And then what they do is they pay us off in 1 month. Right. But that's how unique you can be in the alternative finance space. I can tell you there's not a bank in America doing a deal like that. They don't have the ability to be they're not a small business themselves. Let's face it. Right. Like they're FDIC regulated. And let's face it, small business lending is an unregulated industry. Right. Where we operate is unregulated. So you do have the ability for these types of products to exist. And when they're used in the right scenario, they make a lot of sense. Now, I'm not going to sit here and tell you there aren't people out there that are, doing this the wrong way. In fact, if you are one of these business owners who ends up with the wrong product at the wrong time, it can really hurt your business. I mean, at the end of the day, sometimes our deals are expensive. We're alternative to the bank. So sometimes, if you have a sub 500 credit score, you probably aren't getting a prime rate. Well, again, that's where dollars make sense has to come into the scenario. If you borrow money at 30%, but you make 70%, well, guess what? The first time out, you might have only made 40% on it, but 6 months from now, when that loan's paid off and you go back, you're getting 70% over and over and over again every time you flip the money that we gave you access to the first time, right? So again, there is an opportunity cost with not doing anything. And that's where we just try to make sure that business owners are aware of that and have had that kind of conversation with themselves, because it's very easy to get sticker shock and go, hey, maybe this isn't the deal for me. But at the end of the day, you got that far for a reason. So what was it? Was it hey, I was never really all that interested to begin with, which is fine, right? Maybe it's just not the right time. But if timing is right, make sure you're making a well-educated decision. And that's really all that we really pride ourselves on, is just being able to be a resource. So that's what we're here for. I would say anybody who is interested, make sure you ask questions, right? Make sure you have a whole understanding of how the deals work, whether you work with us or not, no matter who you're working with. And the last thing is I would tell you to check out their reputation. I'm not going to sit here and harp on ours, but I know that if you go on Google or Trustpilot or Best Company, you're going to see thousands of 5-star reviews. Go Google Chase and tell me what their reviews come up as. I know that it's not easy in the financial services sector to keep people happy, especially when you sell high cost money, right? In a high cost time. So,
Right.
you can take that with a grain of salt, but I can also let you know that when you do look at those reviews, those are real businesses. Those are real partners that have sent us their clients. You're talking CPAs, bankers who refer us their clients to get funding for themselves. So it just says a lot about the nature of the business, the way that we do business. When people refer us their clients, we take that to heart, and we make sure that we roll out the red carpet. So if anybody does apply with us, I can assure you that's exactly what you're going to get. Everybody is going to get a chance to speak with an individual who will go over your exact scenario. It's about a 15-minute, I don't want to call it an interview because some people might get scared by that, but it's just to learn more about your scenario. Like I said, business owners are borrowing money for a reason. We want to understand that because there might be a product out there that really speaks to that. So we're going to get a chance to understand your business, what you're borrowing the money for. We're going to collect a limited amount of documentation. Typically, it's just an application and your last 3 months of bank statements. You can connect that all digitally. It's a very seamless process. Once we have that information, though, it's typically about 12 to 24 hours for an initial approval, and then anywhere from 1 to 3 business days for funding. So, if you are somebody that, hey, it's Wednesday and I need this money by Friday in order to take advantage of a purchasing opportunity, well, let's get on the ball here, because we can certainly make that happen for you, but it's not going to happen if we're not on the same page. So I just always say we move at the pace of the borrower. Whatever their opportunity is, we just try to time the funding so that it meets their opportunity.
Right. And that's of course understandable. And if you guys do want to apply, there will be a link down in the description where you can go ahead and get access to that quick application that he mentioned. I believe it says about 60 seconds really for the application. Get that in, submit your documents, and then you just wait for a call and then go over your options. And just to kind of home in on and end on something that you mentioned there, when it comes to getting financing, there are a bunch of different places that are out there. You want to make sure that you're going with the right place so that you can get the right funding, at the right time. It's going to meet your needs. And at the end of the day, if you're looking at risk, almost everything, walking out the house in the morning is risky. And when it comes to doing things financially, investing, anything like that, it's always going to be risky, but it's always about calculated risk. So while some things might be risky, you also can't afford to miss out on that hidden cost, which is the cost of not taking any action, as Tony mentioned, because you might miss out on the opportunity to save on getting a wholesale deal from having the extra funding to get more than what you could pay for out of pocket. Or you might miss out on a deal because you don't have the inventory, or you might make less sales from not having the inventory when you could have got access to more. It's a whole bunch of ways it can go. But like he said, calculate the risk to see if you can make it work and make it make sense. And that's what they're there to help you do as well. Ultimately, you come down to make the final decision, and you just kind of take things from there. But that's what you need to have in mind when you're going into any type of financing, and treat this the same way, of course. Did you have anything else you wanted to add, Tony?
Yeah, I had one more point I wanted to make, just because, I know we talked a lot about kind of traditional versus alternative. And I think one important point to kind of really highlight, especially right now, and I hope we get a chance to do this again in a few months, because so much changes for us in a 6-month period. 6 months ago, the lenders that were doing deals are not the same lenders that we do the bulk of our deals with right now. That happens every 6 months. They're cyclical. Why? I have no idea. If I knew, I'd make a lot more money than I do. But I think the one thing that I really wanted to point out and really wanted to hone in on is when you are a bankable client, that doesn't mean that you can't go take alternative finance. And what I mean by that is the savvy business owner understands all of their options, right? A lot of what we're seeing these days are people who may even already have bank financing, right? If you are somebody that took bank financing in the last year or two, you know that well is probably tapped. There really isn't much availability there for you. So if you are somebody who has a bank line or a loan with your bank, you still can come to alternative funding, and we will subordinate or go behind a traditional type of financing. So it's important that you have that understanding. The second thing that I wanted to point out, and it's kind of a part B to that same notion, is where we're doing a lot of business right now is with customers that 6 months ago would not have borrowed money from us. And what I mean by that is banks have changed. They've pulled in guidelines. We were just touching on risk. Well, nobody wants to talk about the fact that a riskiest part of a bank's portfolio is small business. Right? They don't like lending their money to small business. So when they get the opportunity to rein that in and bring in their requirements or raise their requirements a little bit so that it's a little bit more of a tight borrower box, they like that because, again, they're hedging against the riskiest part of their portfolio. There are lenders out there that will specifically help small business owners. So why not look at those types of options? What I'm really trying to get at is we're doing more large deals now than ever. And what I mean by large is like above 250 or 350,000. We do loans, and I don't think we even got a chance to touch on this. We do loans from $5,000 to $5 million, right? It's a pretty wide range. A good percentage of the loans we do are between 30,000 and 350 grand. That's probably where we do 65% of the deals that we see. But more and more recently, we're seeing deals 350, 500,000, 750, $1 million, $1.2 million, $2 million, $2.5 million, $4 million. And I think that's just because some of these clients are just missing at the bank. I think it's, hey, 6 months ago you had the profitability, but now you don't. Or, maybe the financials didn't end the year the way that we thought. Or, hey, listen, you might be in business for 5 years, but we have a 7-year minimum on your industry now, right? Like some of the things that you might have had available to you 6 months ago just simply aren't there. And that's a unique place for us to be in right now, because again, like I said, we're seeing a lot of clients who, 6 months from now, they might be back at the bank. And that's fine with us. Again, we're here to be, I once heard it described as we're like investors that are here when you need us and gone when you don't. Essentially, when you need that injection of capital, we're here, we're able to be educative around it and really give you a good understanding of how you should go about utilizing this funding. But if you don't need us, we're gone when you don't need us, and that's a powerful place to be in as a business owner, is knowing that you have that type of resource in your pocket. So, when it comes down to these types of deals, we see a lot of different types of businesses, from early stage businesses to well-established businesses, this and that, and everybody in between. But one of the things that's really stuck out to me recently is the fact that we're doing more of these bankable type of clients, more now than ever. And I thought it was interesting. We started talking about traditional versus alternative, and, always remember one hand washes the other, right? But both wash the face. So, you gotta make sure that you understand how to utilize all the different resources that you have access to.
Yes, I would definitely agree with that, because you don't want to limit yourself to only having access to one one set of options. Again, it goes back to those having options and knowing, what you have available to you so that you can utilize what's going to be best for you at the time. And, with things getting tighter, at some banks, like you mentioned, and them wanting to add more regulations or more, stipulations on the approvals with small businesses, is definitely good to know what other options you have out there available to you. I just want to ask you, I'll ask you one quick question too that just came to mind. In regards to rates being increased, what would you tell to a person that's thinking, okay, maybe I should wait until that, maybe starts to go down as far as the rates increasing out there?
I would say you're playing with fire. That would be the first initial knee-jerk reaction that I would give them, is that you're playing with fire. I'll give you a personal story. I bought a house in the last 3 months. My home, right? So I would tell you that my family's need and outgrowing the apartment we were staying in would much outweighed the cost of capital that I'm paying for my mortgage. But it's certainly not the rate that I would have got if I would have bought a house 12 months earlier. And I don't know if my rate would be better if I would have waited 12 months after. But I can tell you my scenario was that it made sense for me to pull the trigger when I did. And that's what I would say is there's no real harm in applying. It's, we do a soft credit check here. So it's not you're not going to dock your credit, for applying or anything like that. So it really does kind of just pop the hood and understand your options. Now, when you move forward, like an SBA loan, they might do like a hard credit check on funding or something like that. Like there might be something towards the end of the finish line once you've accepted funding. But it doesn't really hurt to apply. So I would say at least weigh your options. Because again, like you and I were talking about pretty much this whole call is, what is the cost of not doing anything? In business, one thing I know is if you're not growing, you're dying, right? So, what does it look like if you keep waiting and waiting and waiting, trying to wait out this, this cost of capital? Does that mean that, the businesses around you are starting to take up that market share that you're not capturing, right? And how long are you able to sustain? The one thing that I think business owners forget is, when you borrow money in your business, it's not like borrowing money for personal use, right? Your business is going to go out and make you money. So when you borrow money in your business, you have to think about, okay, how much money can I make with this money? Even if it's 10 grand, how dangerous can you be with an extra 10 grand in your pocket? As a business owner, I like to think pretty dangerous. That's why it got you into that place in the beginning. So when,
Right.
When you're starting to have that conversation with yourself about, hey, what are the rates and are they going up and this and that? Absolutely. But I can tell you, we sell expensive money, whether rates are cheap or expensive, and there's businesses that take major advantage of this. I've seen so many examples are running through my head, but I think of one in particular where we had a customer who came into us. They wanted nothing but a 2-year term loan. And the reason they wanted a 2-year term loan, they wanted 250 grand on a 2-year term loan. They had it figured out perfectly. They knew exactly what they wanted their payment to be, and that was all they could afford. Well, we start getting into it, and it turns out for every dollar of inventory that they buy, they make $3. So at the end of the day, they were making a lot of money on the money that they were spending. So then we asked, how often are you flipping your inventory? Oh, well, we flip our inventory about every 16 weeks, and it's about an 8-week lead time. So they have to order inventory basically 8 weeks before they're going to need it. So what we've done for them, and this was probably November of 21, we're just about a year past this. We've done 4-month deals. And they've taken 200 grand on 4-month deals basically every 4 months since that point. And what happens is they take the money, they go out and they buy their inventory, and then they come back and they pay off the loan once the inventory's in, and then boom, they're back in for the next round of inventory. But they never have to come cash out of their pockets for the inventory. They've never once spent their own money on the inventory. Right. So as a business owner, you're getting access to the money to buy your inventory, but you're never having to spend the cash that you have on hand. Right. Even if you purchase a piece of equipment in your business and you have $100,000 and you buy a $50,000 piece of equipment, you have a $50,000 piece of equipment, but you also have $50,000. You don't have your $100,000. If you use equipment financing, you keep your $100,000 and you get your $50,000 piece of equipment. And the kicker on top of all of that is you're going to get to write off the cost of capital against any type of profit that you make, right? So if you do make a profit in your business and you are taking out loans in your business, dollar for dollar, you can write off the cost of any loans that you have in your business. So now it becomes a write-off for your business. Now, I'm not saying you should take loans for a write-off. I'm just letting you know that there are tax advantages to it. Now, I would always say, make sure you go through your tax professional. They're going to know the best way to code that for your business. But I can certainly tell you that cost of capital for a business loan is eligible to be written off.
Yes, and that's an important thing to mention there because, like you said, that opened up opportunity for a business owner to make money, to make more money than they probably could have afforded to make based off of inventory out of their own pocket by using leverage with the financing. So you're able to make more money. And then because when you make more money, you do have to pay more taxes. You can get a little bit of that knocked off by using the fact that you used the loan to make the extra money. And that can kind of help. And again, I'm not a tax expert or anything like that. Of course, go to your CPA or accountant to get the details on that. But that's definitely something that you can do to help grow your business faster than what you would have been able to do trying to do it out of your own pocket. And it works because I know from my studies that in college that most of the big businesses that are out there now, they use leverage to become as big as they are because it helps speed up the process on getting to those profits that you're probably looking to see. So it definitely helps out in the long run anyway, and it's worth taking a look at. But thank you for that answer, because I know that interest rate thing is a big thing now. So I know that probably helped quite a few people right there. Did you have
Absolutely.
anything else you wanted to add in there, Tony?
No, the one thing that I'll say about it is, when it really comes down to it, the number one thing you can do for yourself is be educated. Like I said, things are going to change in the next 6 months. I can totally tell you the landscape will change. The best thing you can do at that point is, if timing's right for you then, is do more research then and see what's going on for you then and make an educated decision based on that timing. Because again, the only thing that's consistent is change. Your business is going to change. This industry is going to change. All industries are going to change. And that's kind of the beauty of the business that I'm in is, no 2 days are the same. You pointed something out and I'm in debt. So, I'm kind of jaded on the topic of, other people's money, but I firmly believe in OPM to grow your business, right? Like at the end of the day, why would you come up off of what you've already built to continue to build this business, right? Like, especially if you've leveraged that to begin with to get there. One of the best things a business owner can start to do is start to separate from being, one with their entity, and start to make their business run for itself and their person run for itself, because then they got two things kind of working for them. So, again, not a tax professional, well aware of the advantages to borrowing money around it. We can certainly have more of a conversation around that if you are somebody who applies in the link below. But we would, welcome any additional questions that you guys may have around the tax questions, or how this thing works, or what you might qualify for. So definitely feel free to apply if you're somebody that's looking for money.
Yes. Like Tony said, if you're looking for funds, Rok Financial is a great option to look for those funds with, and to see what your options are. Go ahead and check out the link in the description. If you guys have any questions, make sure to drop those down in the comments as well. I appreciate you guys for sticking with us through the video. I appreciate you, Tony, for being here to deliver all of this great information and insight to people that are trying to get this funding for their businesses to grow and thrive. And, I'll be glad to have you on the channel again, get you to drop some more nuggets of wisdom for us on the financing topic. And I appreciate your time and appreciate everybody for being here. And I'll see you next time.